Greetings. Welcome to this short video on our current market conditions for November of 2018. My name is Mitch Argon. I'm the broker owner of Calneva Realty, and we serve the Northern Nevada region out of our Reno Midtown office and our office in Minden here in Nevada. So the information I'm going to share with you today is listed and formatted in our Greater Reno Tahoe Real Estate Report that we publish monthly. And what I want to do is today is really focus in on why things are changing in our marketplace, and they are kind of beneath the initial surface. So I want to take you through and point out a few trends and some numbers that will help you to better understand our current market. The first thing I want to do is look back historically and just point out the fact that most of you are aware that we've been seeing a rapidly rising market since the 2011-2012 timeframe. This chart here shows the median price on an annual basis for each of the major cities throughout the Northern Nevada region, including 2018 year-to-date. So you can see we've had a very sharp rise in prices, and it appears as though that is unabated. But I'm going to show you some trends here in just a moment that will show you why we think this is going to be changing here shortly, and we want to make sure that you are all able to keep up on the market and make well-informed decisions. So the first trend that we started to notice coming into the marketplace was that the number of homes sold on a monthly basis compared to the same month in the prior year was seeing a material decline. And you can see it here visually. Reno has the highest volume of sales in the marketplace. That's this blue line here. So if you look at 2017, which is between these two green bars here, you can see we're peaking up just over 500 home sales a month in 2017. Here in 2018, you can see we're substantially below that. We never got up to that level on any given month. And as a matter of fact, we're behind now or lower on a month over year-over-year basis per month for the last 5 or 6 months. So here in this green bar, you can see October of this year, 2018, there were 320 homes sold in Reno, and last year in the same month there was 394 homes, almost a 75 home drop. If you look down each of the different markets in this chart, you will see that Reno Sparks, Carson City, and Carson Valley are experiencing the same phenomenon, year-over-year decline in number of homes sold. Dayton and Fernley, representing more affordable homes in Lyon County and a little further away from the major job markets, major amenity markets, are still seeing their home sales strong. So typically the markets will adjust and correct starting with the major markets, and the more affordable areas, as represented by Dayton and Fernley, will lag a little bit. So you're not seeing this trend yet in Dayton and Fernley. So big picture here, year-over-year, sales volume is declining. If we jump in and look at Reno as a bellwether market for the region, I want to show you just by how much the home sales are actually declining on a month-over-month, year-over-year basis by month. So this line up in the chart that's gold that runs up through here represents the number of homes sold on a monthly basis just for Reno. This is single-family homes. And this represents the change on a year-over-year basis. So you can see that starting in March of this year, we were minus 2% on a year-over-year basis. And then each month after that, it's been a much more material number, 25% down, 11, 20, 14, 25, 29, and as recent as last month, October, 19% fewer homes sold in October of 2018 compared to October of 2017. So this is a very real phenomenon. We don't believe this is a seasonal effect. We think that the home sales are slowing simply because people have not been able to, it's an affordability factor. People are not able to, are not willing to spend the money that the prices are selling for, the homes are selling for in the current market. Interest rates certainly have play a factor in that. As interest rates rise, that puts downward pressure on pricing as well. So this has been going on for long enough that we expect this will probably continue as these markets go through a correction. When when you're looking at the markets and are we in a buyer's market or a seller's market, which is what many of you will want to know if you're in the process of looking to buy or sell in the near future. This is a chart that we use to monitor our markets, and I want to explain just a few things on this. It represents month's supply of inventory, and in its most simplest form, when the month's supply of inventory is in this yellow shaded area here, it would represent a neutral market, meaning there's no pressure on prices up or there's no pressure on prices down. Prices would be relatively flat. When you're above this 6-month mark, there is downward pressure on prices, what's referred to as a buyer's market. When you're below this 4 to 6 month yellow bar, you're in a seller's market where there's upward pressure on prices. Now, I need to ask for forgiveness here. We've changed the way we track this metric, and we made that change in January of 2018. So you see a sharp decline here, and so we're going to focus on, for purpose of this discussion, from January of 2018 forward, and the changes that we've seen since January of 2018. Had we not made the change in this metric, which you can see over here, these lines would likely be hovering around the 1 month of inventory, between 1 and 2 months of inventory for the last several years, actually. So what you can see here, and again, I'll focus on Reno, is that Reno went in January of 2018 from 1 month of supply of inventory and 0.9 months supply of inventory. Fast forward to 2.8 and 2.7, almost 3 times the month supply of inventory from January, February to October, November. That's a substantial increase, and it certainly reflects a trend moving in this direction upward, which leads us to what will become probably a more neutral market in terms of pricing. Again, the same thing is true if you look at Dayton and Fernley down below. You can see that there's 1.5 and 1.2 to 1.9 and 1.6. Down here you see 2 and 1.6 and 2.4 and 2.3. So while there's been some change and some movement, it is not as pronounced as you see in the markets of Reno, Sparks, Carson City, and Carson Valley. So as this trend continues and these lines drift upwards into this yellow bar, we will see prices flatten out. We are still seeing price appreciation, but not at the same rate that we were prior. So quick recap. You can see for the last 5-6 months, the quantity of homes sold each month on a year-over-year basis has been declining, and in a pretty reasonable fashion for Reno, Sparks, Carson City, and Carson Valley. What this means is that we've been seeing in the marketplace on a daily basis a fairly significant increase in the number of homes that are having price reductions. Homes are not selling, so sellers want to try to stimulate a buyer into writing an offer for the home, and so oftentimes the price will be reduced to make the home have a stronger value proposition to that buyer. At the same time, because people are going through this cycle of reducing prices, we're seeing the days on the market to sell a home increase because homes are staying on the market longer. People are going through price reductions. We just saw this in our last chart. As a consequence of this, the month supply of inventory is going up. And what this translates to, among other things, is a slowing in the price appreciation. So if this trend that we've been talking about continues, the prices will eventually flatten when we get into the 4 to 6 month supply of inventory. So we're still seeing appreciation, but not at the rate that we were. It is slowing, and we'll just see how this market works out. What might be the impact on you? Well, it depends. If you're a home seller, you've got to be aware of these things to make sure that you're going to have success in your endeavors. So the first thing that you should be aware of is that there are more competing homes in the market. A year, 2, 3, 4, 5 years ago, there was very little for buyers to choose from, and they were buying whatever was available. But you are seeing an increase in inventory, which means that you have more homes to compete with. The next thing here is that homes that are overpriced likely will not sell. We were seeing homes that were overpriced actually selling, or selling as the market caught up to them in price appreciation for the last several years. But that's not the case right now. The homes really need to be priced more reflective of their market value. So for a successful outcome, it's really important that you understand that the homes need to be priced at or near market value. and the homes need to be prepared to sell, meaning, properly prepared, cleaning, staging, ready for showing. You really want to be putting your best foot forward as a home seller because the buyers are going to be having more choices, and you want to make sure your home represents the best value proposition for that buyer. If you're a home buyer, you're looking through the lens from the other side. So there's more homes to choose from compared to our recent past from a year ago, 2, 3, 4, up to about 6, 7 years ago. You may be able to negotiate better price and terms simply because sellers are aware that they have more competition, that they may be willing to be a little more flexible. And again, that's compared to the recent past. It's important to recognize that we are still not in a buyer's market. So it doesn't mean you're going to, as a buyer, be able to have any lowball offer accepted by a seller because we're just not in that market yet. We are trending towards a neutral market, but we are still in a seller's market. So you will see in the marketplace today homes that are well priced and that are well prepared for showings are still selling fairly quickly. I hope this has been helpful for you. Again, my name is Mitch Argon, Calneva Realty. And if you have a question or a comment, you can leave it down below in the comments here on YouTube. Feel free to reach out to me or call any one of our agents who may have been working with you, sending you information, and helping you through this process. I hope this has been useful. Thank you for your time, and have a great day.